Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is up about 2% there on the S&P. NASDAQ is up about 1.5%. Semiconductor about 3% there. Small caps 2, Dow 2. Transport did make a move there, 3.3%. Banks up 2%. Looks like energy's up close to 4%. Energy's been pretty much up every single day last couple weeks. Biotech got back up today, 2% there. Looks like gold and silver is gold is flat, silver's down, grayscale's up about 5% or so. But on tonight's weekend analysis, we'll stick with these tickers here. There's a lot of shenanigans that we've seen happening this week. And this is something that we talked about on the last weekend's video. And then I think the even weekend before that, as I was anticipating. And I think if you guys remember, if you watched my last weekend's video, I talked about how there's excessive bullishness. Market needs to kind of flush that out and just create some kind of panic before this market can go higher. And that's what you define an uptrend, right? Market goes up, there's a volatility, shenanigans, pull back, goes up again, pulls back, goes up again, pulls back, goes up again. You know what I mean? That's how bull market operate. Only thing we don't know is when the pullback happens, how much deeper that pullback is gonna be. Is it gonna be a 10% correction? Is that gonna be 12%, 15%? Or is it going to be 7%, 5%, right? And that is something that none of us knows. None of us can able to predict with 100% certainty. We can only able to distinguish and ascertain possible levels, but we can never have 100% certainty of exactly how much pullback we're going to have. And something that we've been talking a lot about is let's not get too emotional, right? Let's not get into dramatic conclusion because market is shaking and baking. I mean, last 10, 11 months since the March lows, right? How many people been calling for major bear market, Great Depression, dot-com crash, right? I mean, it's crazy because it started out Great Depression. And then I think once we start seeing tech stocks move and a lot of these stocks start skyrocketing, this is where we start seeing tech bubble. So we pretty much had everything from Great Depression to tech bubble in just 1 year. Isn't that crazy how that is? And if you're not careful who you listen to, who you follow on social media and things like that, and just because we're people with, we're gonna get, it's gonna affect us because we're emotional beings, and those words sometimes you'll be very softly heard, but sometimes it can take a root, and you might also, become extremely fearful. I mean, there are tons of information's out there, videos, on YouTube, why, this market isn't sustainable, why, we're similar to dot-com crash in 2000, why we're similar to 1929, right? And it's all speculations, it's all just people trying to get attention. I have no idea, but from my analysis, from my own analysis, from my own from my own research, what I found is that we're going to be in a long-term bull market, along the way we'll have corrections, right? So any long-term investors, any steep corrections will be a really opportunity to buy that fear. So let's actually start with a 65-minute chart on the spider here. And we will kind of follow up with what we've been talking about. And then we'll kind of come back and look at some of the long-term, long-term time frame of the market, looking at the daily chart. Currently, we're looking at 65-minute chart here. on the S&P 500 ETF Spider. So I think the key ingredient that we've talked about, that we've inserted on the last night's video, key ingredient was, I think, the pivot, right? This pivot right here. This is a pivot that the market discovered. Not I didn't discover it, market discovered it. I just merely found that market discovered it, right? This is, you can see that that's a prior support area. And it's interesting because it seems like every single time when we hit this level, we see that V-shaped reversal on that area. And today we actually saw double bottom. So you can see, and again, market likes to kind of twist things up here and there. That's totally normal market behavior. So you can see it was a totally V-shape, boom, boom, right? But here, we actually gapped up this morning, right? It was like, I think 1% gap up, and it got faded, right? So there was a lot of shenanigans going on today, this morning. And then on the second hour, it continued lower. I think at one point, this thing traded below it. We also talked about this gap right here that was never filled. Did I give you an example of, I think it was a couple days ago, I give you guys an example of how when the gap doesn't get filled, right, the gap that was left prior to it and it doesn't get filled, it actually favors the buyers. I think with this gap still being open, you can see there were a couple attempts to fill that gap, failed, coinciding with that rising pivot. We saw a gap up, came back down, retested it, little double bottom here, right? And looks like this was a neckline here, right? 378, 379 neckline. And I think, what happened was on that first hour when we gapped up right to that short-term moving average that's been acting as resistance. So we came down to retest what? That rising pivot. And then we made another move. But this time, we didn't fade on that short-term moving average, coinciding with the long-term moving average actually. And they were both residing in that vicinity. And I think on that, okay, so that's first hour, second hour, third hour. On that fourth hour, use that short-term and the long-term, prop itself up. You can see at one point, you see that lower wick here, one point we're falling behind. It opened up on the fourth hour. It was coming down, and that short-term and the long-term moving averages were acting as resistance. At one point, this thing looked like this, and it looked like, without the body at the top, it looked bearish like that. That's what it looked like at one point, without that body, right on that short-term moving average, right? A lot of people thought that we might see continuation to the downside. And then the lower wick was exposed. And then we saw that move, fourth hour, fifth hour, sixth hour. And we kind of blew through all of those moving averages, right? And you can see, and this is kind of what happened here also. You can see right there, you can see on this day, this was a late January, my short term coming down, my midterm coming down, and then we kind of just blew through to the upside once we hit that support there. So we're seeing pretty strong bounce, as you can see the gains here today. However, technically speaking, in the short term, we are still in a bearish downtrend. Right? We still got lower highs and lower lows. So in the short term, despite the fact that we had a great move today by the buyers, we want to give benefit of the doubt to the sellers in the short term, right? Because it can change, but for now, we've seen these big rallies that met with lower high and lower low. So when can we see the short-term moving average or short-term trend changing back to bullish? We want to see this thing breaking above this resistance and cultivating higher high, right? And then coming down, get that higher low, and then do that, right? So market needs to get that higher low and a higher high. It might do it something like this. It might do it something like that. It might do it something like this. I don't know. Or we might just go up here, come back down, and then make lower low. At this point, it's difficult to say. So in the short term, we're still in a downtrend. We're back above all the moving averages, but these lower highs tell us that we're still in a downtrend in the short term. But in the midterm, however, we're still in an uptrend, correct? And also that rising pivot right here, that's also the support. We still got higher highs and higher lows. That low is higher than this low, right? This low is higher than this low. I think if you go back and check my analysis back in January 29th and back in January 4th, back in December 21st, I probably said the same thing. This low right here is higher than this low. This low right here is higher than that low. This low is higher than this low. This low is higher than this low. Therefore, we want to give benefit of the doubt to the buyers in the midterm, but bearish in the short term. And I hope you guys understand what that means and how you can navigate this market with that information. Let's go back to daily. Oh, we didn't check out the oscillator here. So let's quickly check that oscillator. So we talked about on the last night's video that it was very, very early stage of, it was very, very early stage of a cross. But do you know what helped? See, a lot of people thought that this gap up was meaningless or it was some kind of a bull trap. If we didn't see this gap up, I think this oscillator would have been curled down. I think actually this little up move kind of helped it, as you can see right there. You see that? Because yesterday it looked like that. This is what it looked like. It just barely crossed. Remember we talked about it on the last night's video. It barely crossed. So don't ever think these little subtle moves means nothing. It means so much for this oscillator. If we didn't see this gap up, I don't think this oscillator, because even though we saw these 2 hours of decline after the gap up, look what the oscillator was doing. Look how it was separating. You see this? Look how it was separating. Yeah? Look at that. So once it got separated more, further apart from each other, there was a little bit of momentum. And once we saw some of that, that level getting held, look how quickly. And good news about that is, we think this is a lot of big up move. Look where the oscillator is. We're nowhere near overbought. And that's a little bit different picture, isn't it? Because last time when this thing did this, we are at near that overbought. When last time did this, we are near it overbought. We're doing this, we're not at overbought. That means we have, and bulls have energy to at least bring it up to this resistance or even possibly break above it, but at least it's gonna have fuel in its tank to get up to that resistance level. So that gap up that we had this morning was very, very crucial for this oscillator to make that kind of move, right? Otherwise, we might have seen, if we didn't see that gap up, you can see right here, even the fade, my oscillator was in that state where it was crossing up, they're separating. So I think if we didn't see this gap down or gap up, if maybe this thing a gap down, I think it would have been much, much worse. If it was a gap down, it would have been much worse. If it would have been like a open flat and then that long, candle looked like this, made a lower low here, it would have been worse. By it gapping up this morning, coming back down, there was that cushion. Remember what I talked about, how the buyer, and we did something similar here, right? That's something similar here. This is how buyers like to operate. They use these things as a cushion and then bring it back up. Anyway, I think I spent too much time here on the 65-minute chart, so I'll be pretty quick here with the longer term analysis. So again, we've been tracking this rising pivot on the daily chart. We're now looking at primary here, right? Primary term, big picture here. We're looking at last couple years, 2-3 years of price action. We definitely want to give attention and the respect that it deserves at this point, because when we zoom in here, looks like we held this level. We held that level here, right? And it needs to see a follow through, because it's interesting to see we had similar candlesticks, similar to what we saw back in what? March 1st, right here. That's what is known as a hammer bullish reversal candle. But any bullish reversal candles, it needs a follow through. If there's no follow through, then it might be meaningless. I actually think if we don't see a follow through at least 2 days, so we need to see a bullish candle for 2 days, we may continue to see some volatility, some up and down shenanigans next week. We talked about how we are kind of in that emotional ride that we've been in since pretty much in February, right? Since pretty much middle of February, that we've been in this emotional ride with that excessive bullishness we saw here. I think it may continue next week unless we see at least 2 days of follow through to the upside. But overall trend is bullish. Long-term investors want to continue to be long, and when we see a decline, you always want to look for opportunity, right? Is there any stocks that are way undervalued at this point? Is there any stocks or sectors that you can kind of look into and see, okay, maybe you can get into, maybe accumulate on this fear, right? So that's a good thing about being a long-term investor. If you've been investing for years, maybe you even bought these levels, it's good to see when there's a pullback, right? You look at some of these levels, understand, okay, are there any stocks that I can accumulate? Any kind of, you know what I'm saying? Nothing crazy at this point, because we don't, at this point, I think we're seeing about 7-8% correction on the S&P and about 10% on the NASDAQ. Yeah, about 5.4%. So that's not a big correction, right? I would have to say like maybe 10% is much doable for, at least for me to go aggressive, accumulate or buying that dip. I mean, this was 8%, this was 10% or so, 8% here. But currently we're seeing 5% after this kind of move. There will be, few stocks, few sectors, you can accumulate, but I'll be a little bit more reserved and just holding my current long positions, right? So I think I want to continue to give benefit of the doubt to the buyers in the long term, not because we're holding above it, but because we're also in a primary uptrend, long-term uptrend, right? We got these higher lows and higher highs. We're trying to figure out, where is that higher lows going to be? Is that higher low going to be here, right here? Or are we going to come back down a little lower before higher low? That we don't know. You don't know. I don't know. No one knows. We could potentially move from here, and we could continue to have a choppy months. We could maybe make another leg higher and pull back. None of us know. So how I would play it is, I want to continue to give benefit of the doubt to the buyers. I want to continue to hold my long-term investments, right? But understanding that we are in the short term, as we talked about here, short-term downtrend. So that going into next week, I'm thinking we may continue to see some shenanigan up and down move unless we see a follow through. So for me, I'm continuing to be long in this market. I am not bearish overall that we're in a bull market, we're in an uptrend. I want to continue to give benefit of the doubt to the buyers. And if we do see this level hold, we may see another new all-time highs. If we do hold this level, right? And some of you think that, well, what if we break below it? Is this going to be end of this bull market? No. Sometimes market will give you something like this here, come back down, and things might get a little bit more hectic though. If we do get below this level, things might get a little bit more hectic. Probably going into like some more and things. So it'll be better to hold this level if you want to see another leg higher to the upside, maybe to 420 on Spider. It'll be okay to come down slightly, maybe retest that moving average going right back up. That will be okay. But if this thing starts coming down much lower below this level, things might get hectic in spring and summer. But again, I'm getting too ahead of myself. So let's give benefit of the doubt to the buyers in the midterm and the long term while being bearish in the short term, right? Let's look at the NASDAQ here. So NASDAQ is now retested. Let's see here. Look at that right here, right? Retesting my long-term moving average. NASDAQ is suffering about 10% correction, which is really nothing because NASDAQ made a pretty significant move here. 100% move since the March lows. Currently about 10-11% correction. That's completely normal correction here. I think this was about 12%, 13% or so. Completely normal correction after this kind of move. Another leg higher, pulling back. Totally normal. I mean, I would almost welcome this just because, you know, again, there are a lot of excessive bullishness in tech sector. Let's you know, and a lot of people are chasing up here, right? Let's kind of kill that excessiveness and then buy seeing that correction here. And with that, you know, there might be stocks you can kind of, you know, watch and see. You can potentially add or accumulate more when there's fear. So currently, prior resistance, potentially, I don't know it yet, acting as support. We do see a hammer candle there, but again, that hammer candle means nothing without the follow through. That's pretty nice. That's actually textbook hammer there, but that needs a follow through at least couple days, right? At least couple days. We have the rising pivot here also on the Qs on the NASDAQ. I think NASDAQ looks much more bullish than S&P. Obviously, we got very well defined higher high here. Even if this thing gets below 290, start coming back down, retesting that level, it still looks very much bullish than S&P, right? So on the S&P, we talked about how we're right on that pivot, right? But remember, NASDAQ already went through it, right? Because what S&P is doing right now is what this thing is doing, what the NASDAQ did back in September of 2020, last year, right? This is what the S&P is doing right now, prior resistance, retesting it, right? Came down, retested twice, well, 3 times total. So S&P is doing something like this right here, but you can see on the NASDAQ, it never breached below. So Spider may be holding, it will be much bull. And you know what happened on the NASDAQ when we saw these level hold, we did see another leg higher. And that's kind of what we're looking for on the NASDAQ, or a Spider. But on the NASDAQ, we're currently right on this pivot, prior resistance as new support. And that long-term moving average coinciding in that level at 300. So it'll be interesting to see how the market plays out next week. Bullish in the long term. Why? Higher highs, higher lows. Where that higher low is going to be? Is it going to be here or is it going to be here? We don't know. But any of those levels will qualify for higher low for this bull market to continue. Down, up, down, up, down, up, right? So again, as I look at Spider Qs, recap it for you guys. Short term, we are in a bear sentiment. Mid-term bullish, long-term bullish, and this is a very healthy, bullish, trending bull market. And I want to continue to be long this entire year. Probably even going into next year. There will always be corrections along the way. This is what long-term investors must learn. If you want to ride rallies like these, you want to be part of the rallies like these, you must learn to go through pullbacks. Just think about, going from March here to all the way here. If you're always in and out, in and out, in and out, you tend to miss out majority of moves. If you're trying to short this market, think about you miss out this move, but trying to make profit from these, it's much, much more difficult. I'm telling you, it's easier to profit from this move and what potentially coming next than trying to time these pullbacks. Let's go to VIX here real quick. VIX, we talked about this here. VIX will pop. VIX will come back down. That's what it does. We got these lower highs here. VIX is, in a kind of in a downtrend, right? In the midterm here. So VIX is probably gonna spend an entire year trying to fill this gap. But VIX did get hammered today with that bearish engulfing candle. So I think we might see this thing continuing lower to the downside next week. Quickly, let's look at gold and silver. Gold has been getting been getting hammered last several weeks here. So we're back down to my last level of fib. And excuse me, and we are kind of retesting this area, potential pivot, support, congestion area. I like to see gold and silver finding support in that vicinity. In the primary term, we are still in an uptrend, right? We got higher lows and higher highs. Gold market, just still trying to figure out where that higher low is going to be. Remember, excessive bullishness. Do you know when I closed out all of my longs on gold? I've been accumulating at these lows though. But, I was long prior to, I was long on gold like 2019, 18, and COVID. You know why I was closed out all my gold and silver calls and shares and all that up here? Because there was way too excessive bullishness. What was last drop for me was, I think, right on this last day, there was an article. It was very popular. Everybody was sharing it on Twitter. Like, oh, the gold is unstoppable. The gold is going to go here. There's another, 50% move to the, or some crazy thing. I'm like, that's it. I'm done. I'm out of here. That was, you know what I'm saying? That was last straw for me. So when there's always excessive bullishness, right? Warren Buffett said, be fearful when others are greedy. Be greedy when others are fearful. So right now, there's a lot of fear going on here, and everybody who chased up here, this has been getting really, really difficult in the last, I don't know, how long has it been? Like 7, 8, 9, 10 months, right? So best way if you're trying to time this perfectly with your short-term calls and things like this, it's going to be very, very difficult to profit in this market. You should have a long-term positions, which is buying, GLD shares or silver shares, something like that. If you're going to go with the options, I probably want to do with leaps 1 year, 2 years out, and give enough wiggle room because none of us can find the perfect low. So I think this might be a good level for gold to find reasonable support. A lot of the value investors might show up in this vicinity, I think. We don't see any evidence of that, but I think we're pretty oversold at this point. Even when I look at my weekly chart, it seems to be oversold. Let's go to silver here. Silver is actually looking a little bit more gloomy here, potentially double top, but this was COVID, so I don't think we're going to see something like that. But this could essentially turn into some kind of a consolidation, right? It doesn't always have to be a major toppy pattern. It could turn into a consolidation if this thing can move sideways, kind of digest its gains before going higher. So overall, I think gold and silver, we're still in a primary term uptrend, but very, very hectic environment in the midterm with the short-term bearishness. But I think we're potentially getting close on those, before making a move. And again, this is what the stocks, indices, gold market, that's what they do. Excessive bullishness. It's gonna, and then if you chase, this is what you don't chase. You chase it up here, and then it's just been doing nothing, right? So it's best not to chase, best to kind of look for value, and then buy when you think it's a good value, when there's fear, right? When it seems like there's a lot of greed, there's a lot of too much optimism, and it's crazy just the way our human emotions work. When things are green, you want to buy everything. You just want to buy everything. And when things are red, that's where you want to be reserved, you want to be defensive. You actually have to do the opposite. This is a reason why, one of the main reasons why most people fail at trading and investing is because you essentially have to go against your human nature. Let's go to one last one here, Grayscale, Bitcoin. So, okay, so Bitcoin we filled that gap, and you see how quickly dip buying activities occur in that vicinity. This is why you want to track gaps. Otherwise, how would you know that this would have been a strong support area? So we talked about on the last weekend video. I don't want to see this thing coming back down, retesting this pivot. I think if we do, things will get very hectic for a while. I like to see bouncing from here and filling these gaps. If we start falling back down to retest that, I think Bitcoin might be in trouble. But for now, it's not too bad. If we do fib, this is probably gonna be at 50% there. The gap support, short-term, mid-term moving average. We got higher highs still going, with the higher lows still going. So this is an ideal good level for this uptrend to continue, right? The higher lows to continue here potentially. So I think if we can see this thing getting up here and filling these gaps, that would help the bullish cause. However, if these gaps act as resistance and start pulling back down and start cultivating lower high, that's gonna be a problem. You guys have a great evening and great weekend. Good luck trading next week.